people into the country illegally. That is amazing.
Honourable
You human trafficker.
Honourable they are not picking our calls. They made up their mind.
So no agreement with the EU, but
Every day, our lives are changed by history.
We are one people, all of us.
Leaders, politics,
Nobody's ambition is what's the blood.
I have fought very firmly.
natural occurrence, war, and the world economy.
I belong to everybody, and I belong to nobody.
Atn covers all on Atn Politics today.
From the line across the ocean to the land beyond the mountain.
Good day, everyone. Fresh episode of Atn on Atlantic Television Network right here in the city of Port Harcourt. It's the network's medium of bringing the happenings in the economic sector of the society to discerning viewers. This program is aimed at bringing to the doorstep of the viewers the business, financial, and economic activities from all strata of society. Its delivery is accentuated through the various exchange across the world, news about government economic activities, private sector businesses activities, also laced with expert opinions and stakeholders analysis, mixed up with correspondent reports to give you the best for today. Before today's bulletin is presented, first the headlines. On Forex, Naira appreciates to 1,278 Naira against the USD. In finance, EFCC to arraign 2 Binance officials for money laundering. In oil and gas, Dangote refinery commences local supply of petroleum products. And the Billionaires Club, Forbes lists Dangote, Adenuga, Rabiu, and Otedola as richest Nigerians. Wow. Let's go for a very short break, and when we return, we'll reel out the details for today. Please stay tuned.
from the line. Across the ocean to the land beyond the mountains. Through the Sahara, we bring honest news, live analysis, expert discussions on trending stories. Politics, business, social economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today. Only on Atn. on the line across the ocean. Line across the ocean.
You're welcome back, and now let's go into the details for today. The Naira began the new month on a bullish note, appreciating to 1,278 Naira against the US dollars from 1,390 Naira per dollar recorded last week Thursday. This indicates an increase of 81 kobo at the close of the trading activity. According to data from FMDQ Securities, indicating the indicative exchange rate for the Nigerian autonomous foreign exchange market closing below the 1,300 ceiling marks, the first instance since January 26th of this year. The Naira depreciated to as low as 1,615 Naira to the dollar on March the 13th, 2024, since the introduction of a series of foreign exchange policies by the central bank, the Naira has gained over 21% on the dollar since March. Liquidity in the forex market has been attributed to an array of policies currently implemented by the Central Bank of Nigeria. Key include the unification of exchange rate windows, liberalization of the foreign exchange market, clearance of foreign exchange backlog obligations for banks and airlines, implementation of a price verification system, imposition of limits on banks' net open position, and removal of the daily cap of 2 billion naira on remunerable standing deposit facility, and overhaul of the bureau de change segments. Forex turnover is a critical metric in the financial world, as it represents the total value of all foreign exchange transactions completed within a specific time frame, providing insights into the liquidity and vibrancy of the foreign exchange market. High turnover rates indicate a highly active market with numerous participants engaging in buying and selling currencies, which can signal investor confidence and economic stability. In the last 2 weeks, the Central Bank of Nigeria and other banking institutions improved dollar supply to the foreign exchange market by $2.5 billion. Similarly, foreign exchange transactions between willing sellers and buyers at the Nigerian autonomous foreign exchange market reduced by 106% to $111 million on Tuesday from $857 million at the close of trading activity last week Thursday. The summary of the foreign exchange trading revealed that the intraday high closed at 1,312 naira from 1,392 naira per US dollar on the last Thursday. Also, intraday low remained at 1,250 naira. It traded last Thursday. The foreign exchange resumed on Tuesday after the Easter holiday, with the Naira appreciating at the parallel market to 1,220 Naira to the US dollar. Bureau de change operators bought at 1,220 Naira per dollar and sold either through cash or transfer to customers at 1,265 Naira to the dollar, with a margin of 30 Naira. This represents 1.99% appreciation over 1,280 Naira closed last week. That's success, that's progress. The Naira strengthened in both the official and parallel market segments following the central bank's move to clear all verified FX backlogs, financial tranche of $1.5 billion, and the Naira, which appreciated by 21.8% month-on-month in March 2020, 2024 is expected to maintain the trend in April, following the policy of the measures of the Central Bank of Nigeria. Moving on, the impact of currency weakness on the Nigerian private sector was evident again in March as goods selling prices rose. However, Stanbic IBTC Bank Purchasing Manager Index PMI remained unchanged at 51.0% in March and the joint lowest in the 4 months. The report stated that purchase costs rose at the sharpest rate on record, meaning companies increased their own selling prices at an unprecedented pace, noting that the rate of expansion in the business activity ticked higher, but steep price rises acted on limit demand and the pace of new order growth eased to a 4-month low. Meanwhile, employment decreased for the second month running. The headline PMI was unchanged at 51.0 in March and the joint lowest in 4 months. The latest reading pointed to a slight improvement in business conditions during the month, and one that was softer than the series trend. Readings above 50.0 signal an improvement in the business conditions on the previous month, while readings below 50.0 show a deterioration. The bank says price pressures remained elevated in March. In fact, the rate of purchase price inflation hit a fresh record high for the second consecutive month, largely due to the impact of currency weakness. There were also some reports of higher transportation costs. Employee pay was also increased in response to the cost of living pressures, resulting in the sharpest rise in staff costs since last November. In line with the picture for purchase costs, the rate of output price inflation was also the steepest since the series began in January 2014, as close to 69% of the respondents increased their charges over the month. With prices rising sharply, firms faced challenges securing new orders. Although new businesses increased for the 4th month running, as some companies noted greater client interest, the rate of expansion was the softest in the current sequence of growth. According to the report, the rate of expansion in business activity quickened slightly from February, but remained relatively modest. Increases in activity were seen in each of the agricultural, manufacturing, wholesale and retail, and services categories, while output and new orders continued to rise. Employment resignations caused staffing levels to decrease marginally for the 2nd month running. Purchasing activity returned to growth. However, following a reduction in the previous survey period, it noted that where input by this was linked to efforts to meet new order requirements in a timely manner. This was also a factor behind the sustained growth of inquiries. That said, backlogs of work ticked higher and amidst the high cost of materials and delays in payments by customers. Suppliers' delivery times, meanwhile, continued to shorten, in part thanks to the muted demand for inputs and prompt payments. Confidence in the year-end outlook for business activity strengthened from the previous month's record low, but remained relatively weak at the end of the 1st quarter of the year. Wow, that's some improvement, but there's still more there. Going on, the Nigerian government, through the Economic and Financial Commission, otherwise known as EFCC, on Thursday, arraigned Tigran Gambrayan and Nadim Anjawala, 2 top officials of Binance Holdings Limited, on 5 counts of money laundering charge. The Gambrayan and Anjawala, who escaped from lawful custody on March the 22nd, fled Nigeria and will be arraigned before Justice Emeka Nwite of the Federal High Court, Abuja. Although the crypto exchange firm Gambayan and Anjawala are listed as 1st to 3rd defendants respectively. Anjawala, who is described to be at large by the EFCC in the counts, is expected to be arraigned in absentia in the charge dated and filed on March the 28th by the Anti-Graft Agency, the trio are being accused of money laundering to the tune of $35.4 billion. Wow. Count 1 accused the defendants between January 2023 to January 2024 in Abuja of carrying out specialized businesses of other financial institutions without a valid license. It's good to take note of these offenses and charges against Binance Nigeria Limited. The offense is also said to be contrary to Section 57, subsection 1 and subsection 2 of the Banks and Other Financial Institutions Act 2022 and punishable under Section subsection 4 of the same act. The press also had on March the 28th reported that the Federal Inland Revenue Service will on the April the 4th arraign Binance Holdings Limited, Gambayan and Flynn and Jawala, who is on the run, on allegations bordering on tax evasion. In the charge, the 3 defendants will equally be arraigned before Justice Nwite on 4 counts. Though the Federal High Court's Easter vacation, which began on March 22nd, will come to an end on April the 8th, the Chief Judge of the Federal High Court, Justice John Soho, directed the transfer of Binance case filed to Justice Wite, even though he is not a vacation judge. The Chief Judge granted the fiat for the judge to handle the case during the vacation, being a matter of that concerns their national interests. In the charge dated and filed March 22nd, FIRS, the defendants were alleged to have committed the offense or about the February the 1st, 2024. Charge, count 1 alleged that while involved in carrying and offering services to subscribers on their platform known as Binance, they failed to register with the Federal Inland Revenue Service for the purpose of paying all relevant administered taxes by the service. The offenses are said to be punishable under Sections 8 and 29 of the VAT Act of 1999 as amended and Sections 40 of the FIRS Establishment Act 2007 as amended, and under the provisions of Section 94 of the Companies Income Tax Act as amended respectively. The 2 cases were fixed for Thursday to allow for accelerated hearing. On March the 18th, the reporters gave that Justice Wite ordered Binance Holdings Limited to provide the EFCC with corresponding and comprehensive data or information of all persons from Nigeria trading on its Binance platform. The judge granted the interim order after ruling on ex parte motion moved by the EFCC lawyer Ekele Iheanacho. The interim order was granted to enable the Anti-Graft Agency unravel the alleged money laundering and terrorism financing on Binance platform. That's a huge allegation. The commission said it uncovered users who had been using the platform for price discovery, commission and market manipulation, which had caused the tremendous distortions in the market, resulting in the Naira losing its value against other currencies. The EFCC said that from the information afforded to its team of investigators by Binance, it showed that the total trading volume from Nigeria in 2023 alone stood at $21.6 billion. Wow. Well, let's go over to productions and industry. Cadbury Nigeria PLC recorded a loss of 19.09 billion naira for the year ended December 31st, 2023, against 583.1 million naira posted in the year 2022. The company said in its annual report and financial statement sent to Nigerian Exchange Limited, NGX, on Tuesday in Lagos. Mrs. Fola Akonde, the company secretary of Cadbury Nigeria PLC, stated in the report that the company's profits after tax for the year under review declined by 2,269% to settle at 28.157 billion naira as against 1.2 billion naira recorded in the year 2022. She, however, stated that Cadbury Nigeria had made a gross profit of 17.337 billion naira for its 2023 financial year, compared to 7.723 billion naira posted in the year 2022, indicating an increase of 124%. The company said for the year ended 2023, the company's revenue rose by 46% to 80.379 billion naira compared to 55.213 billion naira posted in the previous year. According to her, the company's operating activities recorded an increase of 3,957% from the 194.06 million naira posted in 2022 to 7.872 billion naira as at December 31st, 2023. Akonde also said that the company's share capital traded flat at 939,101 naira in the year under review, as indicated in the year 2022 as under review. Also, she noted that the total equity traded by the company in the year 2023 also dropped by 149% to 6,513,678 as against 13,302,629 traded in the year 2022. The company secretary said that the market capitalization of Cadbury Nigeria, which closed at 22.351 billion naira as at December 31st, 2022, recorded 60% increase within the year under review to settle at 35,685,837 naira as at December 31st, 2023. According to Akonde, the company's stock quoted on the floor of the stock exchange as at December 31st, 2023, gained 60 kobo to close at 19 naira compared to 11.90 naira per share traded in the previous year. Cadbury Nigeria PLC manufactures and markets a range of chocolate malt drinks, mixes, sweets, powder beverages, and chewing gums in Nigeria. It's good for you to know that we are open for advert placements and bookings in this program, and also commercials. And if you can't connect with us, please do and watch us on our ATN socials. And be encouraged to come for your advert placements. Follow us on Facebook, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, Atlantic TV Net, and also watch us live on our website, www.atlanticnetwork.tv. Now let's move on to some more interesting stories. Geregu Power PLC has approved to pay its shareholders a dividend of 8 naira per ordinary share of 50 kobo each, totaling 20 billion naira. The company said this in its resolution in its 12th annual general meeting sent to the Nigerian Exchange Limited in Lagos on Tuesday. Mr. Akinyele Olagbende, the General Counsel of Geregu Power, said the shareholders whose names appear in its register of members as of February 27th will benefit from the dividend. He said that the company also appointed Chief Olukunle Oyewole as an independent non-executive director. The General Counsel revealed that Mr. Anil Dua and Mr. Dorom Grupa were also re-elected as independent non-executive directors of the company. Olagbende stated that the directors were authorized to fix the remuneration of the auditors. He said that the power company also elected Mr. Anil Dua, Mr. John Robert Lee, Mr. Taj Giwa Osage, Mrs. Bisi Bakare, and Mr. Bakare Shofolue as members of the Statutory Audit Committee. According to him, the firm approved the remuneration of its managers and directors for the year ended December 31st, 2023 at the AGM. annual general meeting. Olagbende said that the memorandum of articles of association of the company was also amended. According to him, the new memorandum read that fully prepared and paid shares shall be free of any restrictions on the right of transfer and shall also be free from all lien except as otherwise prescribed by the operator of law. The General Counsel stated that all regulatory announcements by the company will be published in at least 2 national newspapers with nationwide circulation. He said, it is provided that notices shall be given only to those members who registered address are within Nigeria. Any member whose registered address is not within Nigeria may name an address within Nigeria for which the purpose of notice shall be considered as registered address, unless and otherwise directed by a resolution of the general meeting of the company. The number of directors of the company should not be less than and or more than 13. The borrowings powers of the directors are limited so that the aggregate amount at any time owing in respect of monies borrowed by the company and its subsidiary companies, exclusive of intercompany borrowings, shall not exceed a reasonable amount except with the consent of the company in the general meetings. Wow, get a good power there with Otedola doing his thing. Dangote refineries resumed and commenced the supply of petroleum products in the local market on Tuesday. The press reported, quoting the executive director of Dangote Group, Develuma Edwin. The development also confirmed by leaders of some petroleum marketers associations who said we have substantial quantities and products are being evacuated both by sea and road. The ships are lining up one after the other to load diesel and aviation jet fuel. Ships load a minimum of 26 million liters, though we try to push for 37 million liters vessels for ease of operations. Mr. Edwin was quoted by newsmen as saying, speaking on the sale of diesel into the local market, Abubakar Maigandi, the president of the Independent Marketers Association of Nigeria, otherwise known as IPMAN, said that the local oil marketers agreed on a price of 1,225 naira per liter of diesel following a bulk purchase agreement before putting their mark up. And he added that the association's members control about 150,000 retail stations across Nigeria. Meanwhile, smaller depots and petroleum marketers are said to be seeking letters of credit to buy petroleum products from Dangote refineries. Our members are discussing with banks, and these talks have reached advanced stages. When we have our letters of credit, we will begin lifting products. Femi Odewale, the association's executive secretary, was quoted as saying, Dangote petroleum refineries have earlier in January commenced production of diesel and aviation fuel. Announcing the commencement in a statement, the company said that the refinery had received 6 million barrels of crude oil at its SPM located 25 kilometers from the shore. This first crude delivery was done on the 12th December 2023, and the 6th cargo was delivered on 8th of January. The first cargo that arrived at the plant was from Agbami crude grade from Shell International Trading and Shipping Company Limited, Strasco, one of the largest trading companies in Nigeria and globally, trading over 8 million barrels of crude oil daily. The company made a further move towards the commencement of the production of refined petroleum products with the receipt of an additional 1 million barrels of Bonny Light crude supplied by the Nigerian National Petroleum Company Limited, NNPCL. The fresh 1 million barrels of crude from the Shell terminal via the MT Otis-owned Trafigura is the second consignment to be delivered to the Dangote facility out of the 6 million barrels of crude being expected by the world's largest single-train refinery. There's hope. There's hope. Now, let's go on to the rich man's list, the Billionaires Club. Forbes Forbes has listed Nigerian businessmen Aliko Dangote, Mike Adenuga, Abdul Samad Rabiu, and Femi Otedola as the top richest Nigerians in 2024. Can you beat that? Can you join them? This comes as the combined wealth of Nigeria's top 3 richest businessmen dropped slightly by 11.23% to 25.3 billion dollars, please. According to Forbes real-time billionaires released on Tuesday, the 3 Nigerians are the president, chief executive of the Dangote Group, Aliko Dangote, the BUA Group chairman, Abdul Samad Rabiu, and Globalcom boss, Mike Adenuga. The figure was a reduction of 3.2 billion naira from 28.5 billion naira recorded by the business moguls in 2023. A breakdown shows that the fortune of the founder of Dangote Group reduced slightly from 14.2 billion naira in in 2023 to 13.4 billion naira in 2023. The wealth of the chairman of the BUA Group also reduced marginally to $5.2 billion in 2024 from $8.2 billion in 2023, while Adenuga's fortune increased from $6.1 billion to $6.7 billion within 1 year. Meanwhile, Nigeria business magnate Otedola was listed as a new entrant to the billionaire list with a total net worth of $1.4 billion. On the list, Dangote, ranked at number 144th in the world, was described as the richest man in Africa and the richest black man in the world. His business empire, Dangote Group, is one of the largest private sector employers in Nigeria, as well as the most valuable conglomerate in West Africa. Adenuga, ranked at 409 in the Forbes list, is a Nigerian billionaire. He's a Nigerian billionaire businessman, and his company, Globalcom, is Nigeria's second largest telecom provider and operator, and also he has presence in Ghana and Benin Republic. He owns stakes in the oil exploration firm, Corn Oil, and Forbes estimates that his net worth at $6.7 billion in 2024. Rabiu is a Nigerian businessman, billionaire businessman and philanthropist, the founder and chairman of BUA Group, a Nigerian conglomerate concentrating on manufacturing, infrastructure, and agriculture, producing a revenue in excess of $2.5 billion and was ranked at number 581 in the Forbes list. While Otedola is a Nigerian businessman and philanthropist and the current executive chairman of Geregu Power PLC. He is ranked at number 2,152 in the world and a net worth of $1.4 billion US. He is the founder of Xenon Petroleum and Gas Limited. He is the owner of a number of other businesses across shipping, real estate, and finance. He has recently invested in power generation as part of the liberalization of the sector in Nigeria. According to Forbes, these are 2,781 individual billionaires globally. It labeled 2024 as a year for the planet's billionaires, whose fortunes continue to swell as global stock markets shrug off war, political unrest, and lingering inflation. Forbes says that there are no more billionaires than ever, and 2,781 in all, 141 more than last year and 26 more than the record set in 2021. They are richer than ever, but worth 14.2 trillion naira in aggregate, up by 2 trillion naira from 2023 and 1.1 trillion naira above the previous record, also set in 2021. The two-thirds of the list members are worth more than a year ago, and only 1/4 are poorer people. Much of the gains come from the top 20, who added a combined $700 billion in wealth since 2023, and from the U.S., which now boasts of a record 813 billionaires worth a combined $5.7 trillion. China remains second with $473, including Hong Kong worth $1.7 trillion, despite weak consumer spending, and a real estate bust that helped wipe out $200 billion in wealth and knocked 89 billionaires from the ranks. India, which has 200 billionaires, also a record, ranks third. You are watching and viewing ATN Business on Atlantic Television Network right here in the city of Port Harcourt. We'll be going for a very short break. Don't move. We'll be right back.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring From the line.
Welcome you back to ATN Business on Atlantic Television Network right here in the city of Port Harcourt. Now let's go on to the international stories that we have. Global shares mostly declined on Wednesday after Wall Street broke its record bull run with its worst day in weeks. The France's CAC 40 edged up 0.1% in early trading up to 8,139.15, while Germany's DAX rose 0.3% to 18,331.04. Britain's FTSE 100 dropped to 0.6 to 7,887.60. And U.S. shares were set to drift lower, with Dow futures down 0.1% to 39,475.00. S&P 500 futures fell 0.2% to 5,251.50. Japan's benchmark Nikkei 225 slid 0.8% down in morning trading to 39,511.88. Sydney's S&P/ASX 200 slipped 1.3% to 7,782.50. South Korea's Kospi dropped 1.4% to 2,714.14. Hong Kong's Hang Seng lost 1.1% to 16,753.82, while the Shanghai Composite fell 0.2% to 3,070.04. Analysts said worries were growing that anxieties that rattled Wall Street might spread to Asia, despite recent relative positive economic signs from China. Investors are grappling with the possibility that this turbulence could mark the beginning of a more significant correction in the markets, said Stephen Jones, managing partner at the SPI Asset Management. China has set an ambitious target of around 5% economic growth this year, seeking to move past recent troubles in the property sector, remember Evergrande, okay, and the lingering effects of pandemic-era disruptions, COVID-19 pandemic. And a new report from Moody's Ratings said China's slowing economy will aggravate difficult business conditions for Japanese manufacturers in the next year to year and a half. China is an important market for Japanese manufacturers of factory automation and other industrial equipment, automotive parts, elevators and escalator systems. A decline in Chinese demand would weigh in on the company's overall earnings and cash flow, it said. Traders have already drastically reduced their expectations for how many times the Federal Reserve will cut interest rates this year, halving them from the forecast of 6 at the start of the year. That would be in line with the 3 cuts that federal officials themselves have hinted at. Besides, because the U.S. economy has remained stronger than expected, investors say the chances are rising that the Fed might deliver 2 rate cuts this year. In energy trading, benchmark U.S. crude added 4 cents to $85.19 a barrel. Brent crude, the international standard, rose 7 cents to $89.01 per barrel. In currency trading, the U.S. dollar rose to 151.71 to the Japanese yen from 151 to the 151.54 yen. The euro cost $1.0775, up from $1.77.6. That concludes the global stock exchange market. And now let's go to the inflation rates in Europe. The inflation that has squeezed European shoppers and fell more than expected in March to 2.4% has caused spikes in the grocery aisle, eased and overall price rises headed down in the 2 biggest economies, Germany and France. The annual figure for the 20 countries that use the euro currencies came in below the 2.5% predicted by financial markets and brings the European Central Bank ever closer to inflation goal of 2%. But analysts say that the decline from 2.6% in February, though welcome, would likely not be enough to move up in the ECB's European Commercial Bank's first interest rate cuts. The bank's rate settings council meets next week, but the first reduction in borrowing costs is not expected until June, despite an economy that is failing to grow, and several analysts have quoted that. Food inflation fell to 2.7% from 3.9%, and energy prices dropped by 1.8%, according to numbers released on Wednesday by Eurostat, the European Union's statistics agency. Meanwhile, core inflation, which excludes volatile food and energy costs, is to 2.9% from 3.1% in February. Annual inflation fell to 2.9% in Germany from 2.7% in the month before, and to 2.4% in France from 3.2%. The data from Germany, Europe's largest economy, definitely brings some relief for the European Community Bank and Commercial Bank, says Carsten Bresky, the global head of the macro in the ING Bank. But prices for services, which include everything from movie tickets to medical care, are still high. So it's not just Nigeria. Said ECB officials want to see that the latest numbers on wage increases. Analysts have said also that we think that the ECB will commence with rate cuts in June, says Rory Fennessy, the senior economist at Oxford Economics. While core inflation eased, the stubbornness of services inflation and the desire for the ECB for more wage data makes an April cut unlikely. The U.S. Federal Reserve also is expected to cut rates later this year. Federal officials have penciled in 3 rate cuts, even as the decline in inflation there has slowed down. In Europe, inflation spiked to a record high of 10.6%, wow, in October 2022, after Russia cut off its natural gas to the continent over the war in Ukraine, sending energy prices skyrocketing and driving a cost of living crisis. Along with losing that affordable supply of gas needed to heat homes and generate electricity and power factories, the rebound from the pandemic also strained supply chains and helping push up inflation. Those price pressures have eased, but now workers are pressing for higher pay to make up for lost purchasing power. That has slowed the decline in the inflation and left the ECB wary of cutting interest rates too soon. The ECB rapidly raised its key rate from minus 0.5% to a record high of 4%. Wow. Between July 2022 and September 2023, raising interest rates fights inflation by making credit to buy things more expensive, driving down spending and easing pressure on prices. The rate hikes can also hinder economic growth, and the focus has now been turned to when the ECB will declare victory over inflation and start cutting rates to support the stalled economy. The slowdown came as inflation drained consumers' pocketbooks of purchasing power and rate hikes kicked in. The Eurozone economy didn't grow in the last 3 months of 2023, and the figures for the first 3 months of this year are due in April 30th. Wow. Benchmark for U.S. crude oil for May delivery rose from $1.44 to $85.15 per barrel. I'm reading now. I'm going to the global crude market. Per barrel on Tuesday, the Brent crude for June delivery rose from $1.50 to $88.92 per barrel. The wholesale gasoline for May delivery rose 5 cents to $2.76 a gallon. May heating oil rose 8 cents to $2.71 a gallon. May natural gas rose 2 cents to $1.86 per barrel per 1,000 cubic feet. Gold for June delivery rose $24.70 to $2,281 per ounce. Silver for May rose 85 cents to $25.92 per ounce. Continue now. And May copper rose 2 cents also, $4.07 per pound. The dollar fell to 151.61 yen from 151.66 Japanese yen. The euro rose also from $1 to $1.764 to $1.763. The U.S. to U.S. job openings barely changed. The U.S. job openings in the labor market stayed historically high levels, in a sign that the American job market remains strong. The Labor Department reported on Tuesday that employers have posted 8.76 million job vacancies in February, up modestly from 8.75 million in January, and about what economics has forecasted. But the job openings and labor turnover survey showed that layoffs ticked up to 1.7 million in February from 1.6 million in January, the highest since March 2023. The number of Americans quitting their jobs, a sign of confidence that they can find better pay or working conditions elsewhere, rose modestly to 3.5 million. Monthly job openings are down from a peak of 12.2 million in March 2002, but are still at a very high level. Before 2021, they have never topped 8 million. The highest level of vacancies is a sign of the job market's strength and the endurance when the Federal Reserve began raising its benchmark interest 2 years ago to combat inflation. Most economists expected the high borrowing costs to send the U.S. into recession. Instead of the economy has continued to grow, and employers have been seeking new workers and holding on to the ones that they already have. Although the employment rose 3.9% in February, it's come in below 4% in 25 straight months, the longest of such streak since 1960. And at the same time, the highest rates have brought down inflation in February, and consumer prices up to 3.2% from a year earlier, down from a 4-decade high year-over-year peak of 9.1% in June 2022, the combination of easing inflation and steady job growth has raised hopes that the Fed is managing to pull off a soft landing and taming inflation without triggering a recession. The federal base will stop raising rates last July and has signaled that it plans to reverse the course and cut rates 3 times in 2024, but it appears to be in no hurry to start, and given the economic strength that with inflation still above the central bank's 2% target, the job openings are still elevated and relative to pre-pandemic readings and signaling a strong demand for workers. Oh, now, that's the much we could take, even as we have come to the conclusion of the U.S. opening job market. We are open for advert placements, don't forget, and bookings and commercials. Stay connected with us on our ATN socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, we're on Atlantic TV Net, and watch us live on our website, atlanticnetwork.tv. I am Raymond Ken Mbata, your host, and peace and unity are the pathways to progress. Thank you for watching. Until we come again on your screen, same time tomorrow, stay tuned.